Okay, Juan, I'm going to make you the presenter. Look forward to hearing your voice again. I believe this is our second time doing this, and you'll also be able to share your screen.
Hello, hello. Can you hear me?
Yes, Juan. Hi, how are you?
Doing good, yourself?
Good. Thank you so much for taking time today to come and talk about a little bit about your journey and what DarwinX is. And I'm sure there's many people in the community that are going to be interested. I believe we talked, it must have been 2-3 years ago, correct, Juan?
We did, yes. It's been a while, yeah.
Yeah, and I think you were
journey, Dale.
I think this was fairly new then, wasn't it?
It was, yes. I mean, I think we started 5 years ago. So back then we were sort of halfway through the development process. But I'm happy to report now, you know, we've grown quite a bit. We've got now 40 employees, customers in 100
I saw
countries.
the team.
Yeah,
right.
So
yeah.
It's grown.
Congratulations.
Well, thank
Congratulations
you.
on your
and thank
growth.
you for having us.
You know, I usually start off by asking our guests how they ended up getting involved in the business, but I'm just going to take a wild guess and say that it's because of Javier Colon that you got involved in the business.
That's correct. Yes. So he's my brother, and and this goes back to basically two siblings. One of them who's a trader, and one of them who isn't. You're speaking to the one who isn't. And so Javi sort of got into this. He's a civil engineer, and but always liked trading. Got more and more into it. Eventually spent 3 to 4 years trading full time and was doing quite well. But then he hit on what I call the peanut problem, which is manage peanuts, make peanuts, and that was the idea for DarwinX born.
Okay, so why don't we get into what the mission of DarwinX is and how it works, and this could be a great commercial for you. So why don't you go ahead and tell us about it?
Yeah, so well, the mission of DarwinX is essentially solve my brother's problem. So he thought no one who manages to beat the market, which is hard enough, should have a problem with its business model. And so our mission is to empower traders. And what we've done to date is create an exchange where anyone can list their strategy under our F.A.C.E regulated umbrella. They can come, trade with our broker, and choose, if they so choose, to essentially make their strategy available to investors. What I'm showing you right now is the one such strategy by a trader who's been going at this for now 2.5 years.
So let me ask you this: you brought up broker. So do you have an introducing brokerage is under the umbrella, and that's one of your profit centers is volume?
Well, we actually don't have. We're not an introducing broker. We are actually an F.A.C.E regulated broker ourselves. Back in the early days when we started, we were thinking of partnering with introducing brokers. With brokers to introduce the customers to them. However, we realized a couple of things. A lot of the brokers were interested in volume. They weren't necessarily interested in both the traders earning a success fee and the investors making profits. Sad as this sounds, but that wasn't, surprisingly enough, the core priority. And the other thing was a bunch of the users of our platform were saying, "Hey, I like you guys better than my existing broker. You should think of maybe setting up your own brokerage, because I would be, you know, I'd rather trade through you than through the ones that I've got now, because I mean, basically I've got these people hunting the stops, and I'm not sure my trades are reaching the market. I mean, I'm sure this is not news to you." So at that point, we also realized the only way we could guarantee the user experience, both from the standpoint of the traders submitting the strategies and from the standpoint of the investors replicating them, unless we could guarantee the end-to-end flow of all the trades, something was going to happen, and which wouldn't necessarily be under our watch, and still it would result in a bad experience from our side. So at that point, we actually did choose to become our own regulated broker, and we have since been regulated by the F.A.C.E, both as a broker, which is the entity that faces the trading customers, and as an asset manager, which is the entity that faces the the investors and the traders. And as such,
so who regulates you? The FCA, is that out of the UK or Cyprus or where?
This is the FCA out of the UK. Yes.
Okay. All right. Okay. So you're well regulated, and you talk about brokers trading against client positions. What is it? An ECN that's non-competitive and doesn't do that? What's the form or platform that you guys use?
So the form of platform
ECN?
You can think of it as an ECN. Yes, we are regulated by the FCA as a matched principal broker. And a matched principal broker is one that is has chosen to enter all the trades that it enters facing the customers. It has to have a matched exposure against the market, which means essentially we send all our flow to the market.
Got it.
I've just got into our execution conditions. People can look up here.
Okay.
That's the spread they'll get, and they pay us such a commission of $25 per million one way, or 50 round trip, which is $2.50 per lot one way, or 5 round trip.
Okay, no spread. It's a straight commission charge. That's very transparent.
That's correct.
Let me ask you this. So people that believe they have a good trading system, or whether they're mechanical or whether they're discretionary, they submit it to you, and then you do due diligence for a certain period of time before you include them on the network. How do you go about that process?
Okay, so we're actually slightly different. I did mention that we're an exchange. So what we do is any customer with our broker can obviously trade with our broker, as we just mentioned, and then once they choose to, and if they choose to, they can list the strategy, as I'm showing here. So this would be customer Finbo, who has an MT4 account that he's named Finbo Tallies, and he has chosen to list that for investor benefit. So
what about for his benefit?
Of course, his benefit, because he's trading his own money. He's trading $9,000 of his own profit, of his own capital, and on that he's making whatever profits he's making there. But people can then go ahead and just trade him by essentially buying. Say, I want to buy $5,000 worth of Finbo Tallies, and I just go like I'd buy an ETF, really. And I can buy and sell anytime.
Okay, so it's not taking. It is taking every individual trade, but it's not taking it on a per trade basis. You're buying a certain amount. You're buying like shares in FIBO.
You're buying shares in him, and the reason is, and this is something that makes us slightly different from other providers, is we do not disclose the live trades, because if we did disclose the live trades, people would be free to copy them without paying the 20% success fee that FIBO gets.
See, that's what I was saying. For his benefit is an incentive fee of 20% of net profits.
That's correct, and that's his only incentive.
Okay, any management fee in that, like there would be with a hedge fund, like 2% or anything like that?
No management fee, no, and neither do we give back any commissions or anything, because that would encourage churn. It's purely profit based.
Okay, so very interesting model. So then you guys are getting paid through, although it's not your intent to generate volume, you're more interested in volume. Your model is that is a profit center, and then your other profit center would be what percent? Do you also participate in the percentage of, say, FIBO performing, the company side, Tim?
No, we don't. Actually, we did in the beginning. So we used to charge a 20% success fee from the investors, out of which we paid out 15 or 75% of it to the trader, and we kept 25% of it. However, we realized that was discouraging the trader from bringing on any existing investors he already had onto the platform. So that we essentially chose to waive our participation in the 20% success fee, and we just live from the brokerage fees. The setup here is one where we have every incentive to help investors or traders find the better traders. so that there's no churn. So the biggest issue with a broker, as you know, Dale, is it's really, I mean, it's a profitable business provided customers win. If they don't, then you have to reinvest money into getting new customers. And for somebody like us who doesn't profit when customers lose, that's very hard. So we have every incentive to show the investors the more investable traders, and that's why we've got these this toolkit of diagnostic badges that you can see here on the right hand side, where we look at things like
how many FIBOs do you have on your platform, guys like FIBO?
Guys like FIBOs, I mean, good traders are far and few between. So there's 5-10 traders who've been consistently profitable for 3, 4, 5 years. So I can show you. So
okay, well, because that leads me to the next question would be, even the greats have drawdowns, Juan.
Yeah.
You know, I mean, you know, Paul Tudor Jones, you name it. So what's the risk management aspect for customers that buy shares into these traders? Is there some type of fail-safe stop, like you lose 20% of your equity, all trading stops, something like that?
So there's two elements, one which is simpler, which I'll start with, and the other one which is more complex, but is actually the one that really makes most of the work. So you see the listing quote right now of the share, so 203 of 98 for this trader.
Yes.
So I can go now trade, and I can enter a conditional order here. I can set a stop loss at, say, 195. Okay. And I could even set up a take profit at 220. So that will then, you know, bound my exposure.
Okay. All right. So it's up to the client and his risk tolerance to control the risk.
So that's one point. So that's I've shown you the second layer of defense. The first layer of defense is that we have a built-in. So you don't really buy shares in, say, Winnie2 of FIBO. You buy shares in a slight transformation of the strategy, and let me explain. So let's say Dale is Klondike, and he's trading this account. So Dale, on his money, will make the leverage decisions himself, but on the NTI, which is the asset that investors buy, we make the leverage decisions.
Interesting. Okay. So I'm assuming that most of them are lower than what the trader is using.
Correct. So let's say in this particular case, so what we've got here is a measure of risk that we call value at risk of how much risk the trader is trading with his own money. So in this case, it's somewhere between 6 and 7%. So in a bad month, on his own equity, the trader will lose roughly this and maybe a bit more. So like this is somebody who will lose, say, 10% of his equity once every 20 months. That's how he's trading. So we standardize everyone's risk to have this measure that we've got here at 7. For the investors, it's 10%. So regardless of where they're investing, let me show you another example. So this is another case.
That's actually not such a terrible scenario drawdown, 10%.
No. So I mean, it's designed to be about the same risk as a stock. Let me just show you here. So this is another strategy, as you can see, and this trader trades with very, very high risk. Okay, he's on a bad month, he'll lose everything. He's not a bad trader. He's basically somebody who puts down $20,000, and if he goes well, he touches his take profit. If it goes badly, he loses the deposit and he redeposits, right? Now, of course, this is way too high risk, right? He's actually made upwards of $700,000 from the market through us. But as an investor, this is way too much from a risk standpoint. So
he's kind of a home run. He's a home run hitter.
He's a home run hitter, and he's actually good. I mean, he's got a pretty good score on our thing because it actually, tends out to go bet well more than that it goes badly. So you can see right now here. So
I don't know if you play baseball, but most home run hitters are also strikeout kings.
Yeah.
And the problem with trading is if you strike out, you're not going back to bat unless you really have a deep reservoir of resources. So
which he does, but like just to kind of present it, so this is what he does on his money. As you can see, this is he's striked out and he's not going to go back to bad. Of course, this is ignoring the effect of the redeposit. So this is just on constant equity, of course, what happens here, he starts fresh every time, right? But of course, as an investor, you don't want to play this game. You want to play a game where you're going for the 10% drawdown situation. So what we do is we take, this is the trader's risk. So if we promise 10 and he's doing 100, what we do is whatever leverage he took, we divide by 10.
Okay.
Okay, so that transformation is happening behind, and that has another corollary, and that is that this guy, so this XGU thing that you see here, this is the curve that you get with a 1/10 of the leverage behavior.
Yeah. Nice.
And this is comparable. If you go to NTI, this is now comparable to the other one because both are the factor.
You're like Juan, you guys are like a manager of managers.
We are a manager. We are an exchange of managers.
Okay, all right.
And
but you also manage them.
We manage the risk.
Yeah. So okay. Well, what else is there to manage?
Well, the timing. So it's kind of.
Oh yeah, that's true.
So it's basically they take the timing decisions and we take the risk decisions, so that everybody is comparable to everybody. So you can see all these guys over here. There's 1,200 of them. They're all trading their own money as they see fit, but we standardize them all to have the same risk and therefore comparable returns. So it's kind of apples to apples comparison that what you can do here now. And that then allows you to build a portfolio of the guys. So I can see right now, so I can buy any of the other guys. I could just go here and say, you know, LVS or whoever. This guy here, I'll buy him now. And I can then build my portfolio with my correlation of the guys who are in it. So we're an exchange where you can buy managers.
I see. And of course, U.S. customers are not allowed.
Sorry, U.S. customers for the time being are not allowed. Yeah, this is one that comes back to haunt me every time I speak to U.S. guys.
What do you mean for the time being? Is President Trump going to make FX trading great again in the U.S.?
Well, I'm not privy to President Trump's plans. However, I
think for now, you guys might get registered here in the States?
That's correct. So we might get, I mean, the plan B is for us to get registered as an NFA registered IB and work with one of the few FX brokers left in the US. And basically customers will be trading on their accounts on the, on that broker, but they would still benefit from the diagnostic toolkit and the possibility of landing investor capital.
Wow, that's great news for US citizens. I hope it happens for you. So go ahead.
No. I mean, we've done detailed due diligence. We've got the compliance advisor lined up. There's been a bunch of things. Yeah. Maybe we go ahead for it. One thing I haven't mentioned is, whilst we're an exchange, we also are. You can think of us as an open prop in the sense that we also invest in the traders ourselves. So every month, as you can see here, we've got this tournament where the guys with the highest scores receive a capital allocation. So 48 of our customers, as you can see here, will receive a total of 4 million allocated in 2007 and in September. The first guy gets 300, and what you get to keep is the 20% success fee of whatever you grow the monies in the next 6 months.
Wow!
And
this way, great model.
Yeah, no, we've actually paid out. I mean, to date, we've paid out 620,000 euros to customers, and the going rate right now is about $40,000 to $50,000 a month. So it's kind of big bucks now.
Congratulations, Juan. Really put
well,
together.
I mean, we're not there yet. I mean,
I mean, you're not embryonic anymore, that's for sure. And the concept is really a very unique concept. Do you have competitors? Anyone that does anything like this? And I guess my question would be: do the customers? Is it done like on a PAM or a MAM account, or how do you handle the execution?
The execution is handled by us. I mean, what happens here is you can see, I'll just show you how it all works. So let's say I'm just showing the chart here.
Oh, yeah, you showed me an example. Yeah.
So in this example, so you'll see that there's user KPZen and with his strategy 50 intraday, what happens is there's a replica. So after he trades, there's a replica trade for the block of all the investors about, as you can see here, between 0 and 0.2 seconds. So like 0.2 of a second, where all the replica for the investors goes to market, and then of course the market will have moved slightly in that period. So whenever you're green is the investors are getting filled at a better price than the trader, and whenever it's red, they're getting filled at a worse price. Over time, that adds up to what you can think of as slippage. So the trader makes slightly more or slightly less, and depends on the strategy. In this case, actually, the investors are making more than the trader. So it kind of worked out that way. But the execution is all you do is you buy here, and once you've bought, you enter the block of traders that are going to replicate the trader, and there you go.
Well, Juan, beautiful model. Anything you want to wrap it up with? You want to show the website, how people can get a hold of you?
So at this point, so the website is darwinx.com. So it's the Darwin Exchange. We call it the Open Trader Exchange. If they want to trade with us, they can trade. If they want to invest in traders, they can invest. Actually, what we've learned is a lot of the traders have taken to trading the traders, funnily enough. So a lot of the guys go with, they come in to stop losses, take profits on the traders. They're actually trading the FX and actively trading the traders on the side. So that's been quite a discovery since we first started. So that we don't really have that many investors. What we've got is traders and traders, a lot of them. Any questions they've got, info@darwinx.com, and we'll be delighted to get back to them.
Thank you for your time today, Juan, and showing people.
Thank you so much, Dale. I mean, it's always a pleasure, Dale. You're one of the few guys who's been around for a long time, and it must be because you're doing the right thing. So it's always a pleasure to be here, and be delighted to be back here in a couple of years from now, and hopefully show you how it's all grown. I mean, back when we started 3 years ago, it probably looked very startup-ish, and now it's a reality where there's 24 million of capital that we invest in the traders, plus another 8 million of third-party money that's being invested, and it's growing quite a bit. So hopefully we become that exchange where good traders come and get paid for trading on merit. That's the whole vision of it.
All right. Well, I'm seeing it manifest from our last interview, Juan. I wish you continued success and pips running down on your traders and your customers, and you and your brother and your whole team, buddy.
Thank you so much, and yes, best wishes to everybody who's listening as well. Thank you so much for your patience, and hopefully this was of interest.
Definitely interesting. Thank you. Everyone, thank Juan Colon at DarwinX on Twitter, and his website's www.darwinx.com. So that's it for us today, guys. See everyone for Turnaround Tuesday.
Thank you so much.
Glad you enjoyed it. Excellent. And Turnaround Tuesday, we'll see what happens tomorrow. Everyone knows where our heads are at on a lot of trades. I want to once again thank Blake and Steve and Stelios and Grega and Nick. And I want to thank you guys, F.A.C.E. I want to thank you for your attention. I want to thank you for supporting us and becoming a subscriber. And let's have a great week. It's just begun. Enjoy the rest of your summer. You only have about 10 days left. See you, Humberto. Nice to meet you, Leon. Take care. See everyone tomorrow. Remember, you're not in Florida. You're not in the towers from 15 years ago, 16 years ago. So don't just count your pips, count your blessings. See you tomorrow.